everyone, this is Dr. Paz, and I wanted to create this video to give you some guidance on 7-2 final project milestone 3, where you are going to be drafting some memos. So in this milestone, you are going to submit a draft of your memos to upper management. You are specifically going to submit a memo to the Chief Financial Officer, the CFO of the company that you have chosen. And in that memo to the CFO, you're going to summarize the audit process that was conducted. And then in your second memo, you're going to assume the role of the CFO of the company. And as the CFO, you're going to prepare a memo to the board of directors as to what potential issues the external audit team might face, and more specifically, how the company should respond. So let's review the two documents that are hyperlinked here. And so if you see for our milestone 3 here, as previously, we know how important auditing is as a valuable skill in accounting and business. And the odds are obviously very high for you and your organization because you have to be compliant with not only federal, but IRS or internal government or revenue audits. So as accountants, we're required to make that professional judgment on both the financial accounting issues and the internal accounting forecasts within the organization. So the auditor, we know, has to be fair, unbiased, and provide materially correct information for stakeholders such as investors or employers, employees, and even those independent stakeholders. So for this particular milestone, you are going to draft a memo to upper management. So you're going to prepare a memo that is to the CFO, and then you're going to take on that CFO role and prepare a memo to the board of directors. So first and foremost, you're going to prepare the memo that is to be reviewed by the CFO, and here you are going to summarize the audit process. So again, you're going to explain sampling or any other audit work that could be done, and if you would recommend the company pursue this additional work, and if you do, you always have to justify your response. Then you're going to make recommendations to the CFO on how to mitigate that potential risk factors for major business transactions that are identified in the audit report. So keep in mind, we have the audit risk model that consists of control risk, inherent risk, and detection risk. And we know that revenue recognition is one of the higher risk areas in an audit, but that doesn't mean that it's only revenue. There are several other components, like I've mentioned in previous videos, investments or any unrecorded liabilities. Those can all be areas of potential risk. Then in your second memo, you are going to now assume the role of the CFO and again prepare a memo to the board of directors as to those potential issues that an external audit team member might find and how the company should respond. So you're going to evaluate the findings of the audit report from the CFO's perspective, and then you're going to develop a strategy to mitigate those risks, and you're going to describe how to implement that strategy. So basically, if we look at the rubrics, again, you want here to explain your sampling method or the audit work. We know from our previous milestone submissions that we have statistical sampling and non-statistical sampling. So make sure you choose a method and explain how you would go about to conduct that method of sampling. Then you want to make recommendations to the CFO on how to mitigate potential risks. Our biggest contributor to mitigate risks is usually robust and efficient internal controls. So in this case, you are going to possibly provide a detailed description of an internal control or a modification to the process of, let's say, for example, revenue recognition transactions. Then you are going to evaluate the findings of the audit report from the CFO's point of view. So here, typically what happens in an audit is the auditors would propose audit adjusting journal entries to the CFO, and then there's some type of negotiation. one of those types is typically the allowance for doubtful accounts. As an external auditor, they typically want that to be as high as possible, because keep in mind that we show the accounts receivable at the net realizable value. So we take gross accounts receivable and we subtract our allowance for doubtful accounts to get our net realizable value. So that is a potential opportunity there. Then you want to develop a strategy to mitigate those risks. That strategy could comprise of additional internal controls or modifications to a process or additional methodologies that we can partake in to hopefully, prevent any type of error or misrepresentation, especially a material one, in the financial statements. And here you want to make sure that you're going to implement that strategy. So whatever you decide is several factors that the organization should do, then how are they going to implement that? And be specific and detailed here. So if you're saying, okay, we want to make sure that inventory is recorded properly, well, how? What particular steps are you going to tell the organization to do? Is it going to be modifying their inventory valuation method from LIFO to FIFO, etc.? Is it having inventory the minute it's received put into production, like a just-in-time inventory system? Whatever you decide, just make sure that you are creating a strategy to mitigate the risks, and more importantly, giving a detailed implementation of how you're going to put that into practice. And so I would say most students really struggle with the implementation aspect, and they submit vague or generic statements. So in this case, you want to make sure that you are being detailed. So I hope this video helps, and I look forward to your milestones.